1, we will be learning about outstanding expense, provision for expense, prepaid expenses. But before going to all this, let's understand what is a accrual system of accounting. Okay, so accrual system of accounting means whatever income is earned or expenses are incurred for the particular period has to be recorded in that particular period, irrespective of whether the expense is paid or income is received. Okay, so in simple terms, whatever income or expenses for period to be recorded in that particular period. For example, if there are some income and expenses which are earned or expenses which are being incurred for the month of say October 2016, the same have to be recorded in October 2016 irrespective of expenses are paid or not on or before 31st October 2016. I'll give you a simple example here. Okay, say suppose Mr. A is providing tuition, okay, to 10 students. Okay, and he charges rupees 1000 per student. Okay, so what is the total fee? 10,000. Okay, and all students will pay fee on 15th of that month. Okay, so for the purpose of tuition, going to for a tuition classes, what he does it, he has hired a cab. Okay, and that cab charges him 100 rupees per day. Okay, so for 30 days cab hire charges are 3000 rupees. Now this cab hire charges he pays it on 2nd of following month. That is, if the cab hire charges for the month of say October is 3000 rupees, he'll pay it on 2nd of November. Okay, so say we are in the month of October 2016. Okay, now what has happened in October 2016? On 15th October 2016, all students have paid fees. That is, Mr. A has received 10,000 rupees. Okay, but the cab hire charges he will be paying it on 2nd November 2016, 3000 rupees. Okay, so what does the accrual system of accounting says? Even though cab charges are being paid on 2nd November 2016, he has to account for this 3000 rupees on 31st October 2016. So what is the purpose of this? Let's understand. Let's say if we try to analyze the books of accounts of Mr. A, and if he doesn't follow the accrual system of accounting, then what will happen? See, in October 2016, what will happen? His income will show 10,000 rupees and expense will be nil, right, since he has not recorded this 3000. So income will show 10,000 rupees. November, what will happen? Say November month is a vacation, so after October he'll discontinue this tuition. So what will happen? In month of November, income is say 0, right? Expense, he'll show it as 3000. So if we try to analyze, then what we will get? We'll get he has earned the income of 10,000 without incurring any expenses, and in the month of November he has no income but he has incurred an expense of 3,000. So our analysis will go for a toss. So instead of that, what we will do is, on 31st October we will record this expense of 3,000 as outstanding expense. Okay, now let's see outstanding expense, provision for expense and prepaid expenses one by one with the example. Okay, now what is outstanding expenses? Okay, outstanding expense is also known as expenses payable. Okay, as the name itself suggests, outstanding expenses or expenses payable are the expenses which are incurred for the particular period but are not yet paid. Okay, so expenses are incurred for the particular period and they are not yet paid, and at the end of that period we know the certain amount. Okay, so what happens is, at the end of the period we know that the certain amount is to be payable. Okay, but as of today, that is end of the month, we have not paid that expense, only it has been incurred, so that expense is known as outstanding expense or expense payable. We'll see one example of outstanding expense and then we'll see how to pass a journal entry and give effect to the ledger account. Okay. Okay, so this is the example of an outstanding expense. There are 10 employees in the company. Salary for the month is paid to all employees on 4th of the following month. Salary details for the October is given. You have an individual salary of all 10 employees and then the total salary, that is 85,000. Okay. Now this salary of 85,000 will be paid on 4th November. That is, the company will pay this salary for the month of October to everybody on 4th November. So as of 31st October, the salary expense has been incurred, that is, salary is due, right? But the same is not paid. So we need to pass outstanding salary entry or salary payable entry in the books of account as on 31st November. Now let's see how to pass a salary payable entry. Now what are the two accounts affected? One is we need to record a expense, salary. Okay, so one is salary account. The next account is salary payable account. Okay, salary account, as we know, it's a nominal account. Okay, now salary payable account is a representative personal account. That is, it's related to all these 10 employees, right? So by grouping all these 10 employees, we can make a salary payable account. Okay, the salary payable represents all these 10 employees. So it's a representative personal account. Now what will be the entry as on 31st October? We'll put a date, 31st October 2016. Now salary account is a nominal account. So what is the rule? Debit all expenses and losses, credit all incomes and gains. So salary is an expense. So salary account debit, what is the amount? We'll put the total amount of salary. Okay, we will be passing an entry for all the employees in one account, that is salary payable account. So 85,000 Now, salary payable account, it's a representative personal account. What is a rule for the personal account? What is the rule for the personal account? Debit the receiver, credit the giver. Okay, so in this case we are giving salaries to the employees, so we will be crediting to salary payable account 85,000. Narration will be being salary due to 10 employees recorded. Okay, let's give it as voucher number 1. Okay, or you can give it as nil also, it's just an example. Now on what is the date? On 4th the salary is paid. Okay, so let's assume that salary is paid through bank account. Okay, so 4th November salary is paid, so there will be one more entry on the 4th November. Okay, so what are the accounts that will be affected? See, on 4th November we are paying salary of October, that is salary payable of October, we are paying it on the 4th November. So on the 4th November, one account that will be affected, that is salary payable account. And since we are paying it through bank, the other account affected will be bank account. Now salary payable account, again it's a personal account. Okay, so what we have to do? Debit the receiver, credit the giver. Now all 10 employees will be receiving the salary, so salary payable account debit. How much they will be receiving? 85,000, right? Now bank account, again it's a personal account. Debit the receiver, credit the giver. Bank is giving the amount, so you will credit it to bank account. Again the entry is 85,000, being salary for October 2016 paid. Okay, now let's see the impact of all this in our ledger account. Okay, so first I'll prepare what all ledger accounts I need to prepare. One is salary account, one more is salary payable account, and another one is bank account. So I'll make a salary account, salary payable account, and one more is bank account. Right, so salary account, what is the entry? As on 31st November you have debited the salary account, so on the debit side of salary account you'll be writing to salary payable. 31st October 16 to salary payable account. How much is the amount? 85,000. On salary payable account we will pass the same entry, that is 31/10/16. On the credit side we'll write by salary account 85,000. Okay, now the next entry is on 4th November, so before that we'll close our books. Okay, so this is how 85,000, 85,000. Okay, so on 31/10/2016, by balance carry forward 85,000. Okay, so on 1st November 2006, first correct, first November, to balance brought forward 85,000. Okay, now salary payable also, what we will do is 85,000, 85,000, 85,000, 31/10/2016, to balance carry forward 85,000, and then first by balance brought forward 85,000. Okay, so on 4th November, what is the entry? Salary payable account debit to bank account. So salary payable account is debited. So 4th November 2016 to bank account 85,000. In bank account, we'll be writing it on the credit side 4/11/2016 by salary payable account 85,000. So this is how we pass an entry for outstanding salary and give this particular effects in all the ledger accounts. Okay. Now let's see what is a provision. Okay, so there is some provision is similar to outstanding expenses, only the thing is that you are not certain of the amount of expense. Okay, provision, the word itself says that it's a tentative estimate. Okay, so let's see the example. Okay, we have rented a factory premises from Mr. Anil. Okay, so on 30 September 2016, what has happened is the lease agreement has expired. We are in the process of making a new agreement and discussions on price negotiations are going on with Mr. Anil. However, on 31st October, the new lease agreement is not yet ready. So, as per the available information, the rent may be 20,000 per month, subject to approval of Mr. Anil. Rent is paid on the 6th of the following month. Okay, that is rent for the month of October 2006 is to be paid on 6 November 2016. On 6 November 2016, lease agreement was finalized and rent for the October is 22,000. Now, see, we have rented a factory premises from Mr. Anil. So, lease agreement has already expired and we are in the process of price negotiation. Okay, so what has happened is on 31st October 2016, the agreement is not yet finalized. Okay, but depending on whatever negotiations are going on, we are making an estimate that the rent may be 20,000 per month. Now 20,000 is an estimate depending on the negotiations going on with Mr. Anil. It is not yet final. Okay, so this is an example of provision for expenses. So in this case, we cannot record 20,000 as outstanding expense or outstanding rent or rent payable. Okay, because 20,000 the amount may change. It may be more or it may be less. So as of 31st October 2016, what we will do is we'll pass a provision entry. So how do we pass a provision entry? So let's see what are the two accounts that are affected. One is rent account and one is provision for expense account. Okay, rent account is what? A nominal account. So as on 31 October 2016, rent is a nominal account, so debit all expenses and losses. So rent account debit, we'll put it as 20,000. Okay, and 2, provision for expenses is again a representative personal account. So debit the receiver, credit the giver. So in this case, we will be giving the rent to Mr. Anil. So we will credit to provision for expenses account, that is 20,000. Okay, now there is one difference in the treatment of entry of outstanding expense and the provision for expense. So provision, since it's an estimated entry on 1/11/2006, we will be reversing our entry passed on 31/10/2016. That is, whatever account is debited, we'll credit it. Whatever account has been credited, we'll debit it. Now this entry, we will reverse it. The entry will be provision for expenses account debit 20,000 to rent account 20,000. Okay, and then when is the rent paid? When is the rent paid? On 6th November 2016. Rent of October is paid, and what is the amount of rent that has been paid? 22,000. So two accounts that will be affected is rent account, and other one, rent is paid, say we paid through bank, so bank account. So rent account is again a nominal account, debit all expenses and losses, so we debit it. Rent account debit 22,000. Okay, then bank account is what? Bank account is a personal account. Debit the receiver, credit the giver. Bank is giving the money, so to bank account, again the amount is 22,000, and here being rent paid for October 2016. Okay, so this is a difference between the outstanding expenses and provision for expense. And entries in outstanding expenses, we do not reverse the entry, but in provision for expenses we reverse the entry. Okay, now let's see the impact of this entry on the ledger account. What all ledger account we need to prepare? One is rent account, then the other one is provision for expense account, and the third account we need to prepare is bank account. Okay, so let's see. Okay, rent account debit, first entry, so 31/10/2016 to provision for expenses account. Okay, amount is 20,000. Then provision for expenses account, we have to put the entry 31/10/2016 by rent account 20,000. Okay, so at the end of the month we need to close the books, close the ledger account. So 20,000, 20,000, so 31/10/2016 by balance carry forward 20,000 1 November 2016 to balance brought forward 20,000, then 31/10/2016 to balance carry forward 20,000, and one by balance brought forward 20,000. Okay, so now the reversal entry, okay, that is 1/11/2016, provision for expense account debit to rent account. So provision for expenses account will go to rent account 20,000. Okay, so here to rent account what we'll do, 1/11/2016 by provision for expenses account amount is 20,000. Okay, now on 4th, what is the entry? Rent account debit 22,000 to bank account. On 6th, I'm sorry. So on 6th November we'll pass this entry. Rent account debit. So rent account to bank account 22,000. Bank account on the credit side, pass the entry by rent account 22,000. Okay, so this is how we do it. Now if you see the rent account here, if you see amount has been, the balance brought forward is 20,000, and the provision for expenses reversal entry is 20,000. So 20,000 debit credit amount gets cancelled. So to bank account we are writing it as 22,000. Okay, so whatever is the impact of less provision, see we had made a less provision of 2,000, right? Actual rent was 22,000 and provision made was 20,000, right? So whatever is the difference, that is the extra rent that we need to pay more than provision, that is 2,000. The impact of the same we can see it in the month of November. So whenever we are making a provision, there is a possibility that there may be a less provision or more provision, right? So impact of this less provision or more provision will be seen in the subsequent month, or if it is at the end of the year, it will be seen in the subsequent year. Okay, now that's all for today. Now in next session we'll be learning prepaid expenses. Thank you.